Now we see the Chinese market in particular down almost 2% right now, Mark. Now that's despite what the government has been doing, the PBOC has been doing, trying to allay fears, stability not quite back. Why is that?
I think, first of all, people are worried about the renminbi. It's going to go down more. It's going to get weaker against the U.S. dollar. That's number one. And the trade war. I mean, the combination of those two things is deadly for Chinese investors as well as foreign investors. So we could see more weakness going forward. And of course, the Chinese government has been talking up the market. They've been saying, look, the market shouldn't be down as much, but that hasn't worked. That means that these two factors, the currency and the trade war, are much stronger than people imagined.
So what will it take? What does the PBOC and the government have to do? When will they have to bring in the big guns? And what are the big guns, Mark?
The big guns is giving Trump a win. They have to do something about the trade war, and they have to make concessions, big concessions, so that Trump can say, see, I've won, and now China is our greatest friend, and things are back to normal. I think that's what we required.
You talked about how the yuan is one of the big concerns. Of course, the psychological level is 7, but some say, 7 does not even matter. I mean, some are already saying that it will go to 7.5, 7.9. How much lower, in your view?
Well, once it breaks 7, which is quite possible, 7.5.
How soon do you think it'll break 7?
I think it's quite possible. 7.5 is nothing. I mean, then it's free fall. You know, that's what we see going forward. And of course, the problem with that is that as soon as it does weaken, the Trump administration will say, look, you're using currency in the trade war, and that will get even worse, which is why I think the Chinese are probably trying desperately not to have that happen, because they don't want to be accused of using currency in the trade war.
In terms of where the Chinese markets are, how much more of a correction? And do you see opportunities right now?
We're seeing some opportunities in China, particularly among the smaller and medium-sized companies. But there, you see, the problem overhanging the whole market is the credit situation. There are very few companies that are completely clean of credit. In other words, we need to find companies that have very, very strong balance sheets and that have no impact on what's happening in the market in terms of the credit situation.
Mark, it's Yvonne in Hong Kong. Thanks so much for joining us. We talk about China. We were just talking to our guest from CLSA about the concerns surrounding pledged shares right now. How concerned are you about this? Do you think that the government has enough tools to really contain these risks, and how should they do so?
That's a big one. And of course, nobody knows the extent of these pledged shares and how this will be impacting on the market going forward. Because if you have a decline in these prices, then the banks are going to be calling in and selling, calling in the loans and selling those shares. So that puts even further downward pressure on the market. So it's a very dangerous situation, actually.
Do you think that when it comes to the midterms, I mean, everyone says that things could change after November. Do you think that actually has any kind of impact on China or even EM in general?
Yes. If, for example, the Democrats get control of the House, I believe this will be bad for the U.S. market. Because, as you know, Trump has recently said that he wants to introduce more tax reforms, lower taxes for middle-income people in America. If he's not able to do that, that would be very bad for the U.S. market. So you'll probably see more of a correction going forward in the U.S. market, which again will affect the psychology of this trade war situation, because then Trump may get even more aggressive and say, look, our market is down, and it's because of the Chinese taking advantage of us on trade.
Mark, you're worried about this, and do you think that the risks coming from a trade war, with it possibly being perhaps getting worse, has not been really discounted properly? How worried are you about this?
I'm very worried about it, because I think if you look at the size of the China excess trade surplus, 300 billion against the U.S., it's a very bad situation, because in order for them to reduce that significantly, it could mean a great deal of unemployment in China. Just take, for example, Apple. If President Trump says, look, from now on, Apple has to manufacture in the U.S., that means at least 1 million jobs lost in China overnight. And if you look at the prices of Honhai and other suppliers to Apple, you see their prices are down significantly because I think the market is thinking maybe this is going to happen. It's quite unlikely that you'd have a total situation where all the manufacturing moves to the U.S., but it's something that we have to think about.
Yeah, Mark, you mentioned a bit about a correction in U.S. stocks. It brings us to our question of the day that our MLive strategists are asking here. We're going to bring up the full screen just to let our viewers to see. But the question is, how much further does Wall Street need to fall before it can be called an unhealthy correction? What's your take, Mark?
Well, we're down, 10% now on the S&P? I think if it gets to 15, then let's put it this way. If you're a technician, if you look at the technical aspects, it looks very bad. It's really broken down the long-term trend. If it goes down by 15, then we're in completely new territory, and we're going to see more declines.
Is this a broad adjustment happening, Mark? I mean, things change within five weeks.
Yes.
We went from testing a new high to a correction.
Yeah, well, the situation is this. What's leading the declines? Look at the big internet stocks. Any of these stocks, the Alphabet or any of these listed in the U.S. are down, let's say, 20% or so. They're leading the decline of S&P. Now, if this continues, which I think it will, because with interest rates going up, a lot of the tech area is in trouble because no more raising $1 billion for a company that's losing money. That's over. So if you see this kind of situation worsening, then it can be very bad for the market going forward.
Is it too late now to get into this rally?
No, it's really amazing when you see this 30% increase, but it's from a very low point. We've still got a long way to go, and I think he's going to be relatively successful in making the reforms that are necessary. Of course, the main thing is the pension reform. If he's able to get that going, then you're going to see the Brazilian budget in a better shape and the financial markets in better shape going forward. So I'm very optimistic, although, of course, he's never going to be able to accomplish everything that he sets out to accomplish in view of the chaotic situation in the Brazilian Congress. But I think he's going to be able to do a lot, and it'll be more upside for Brazil. Of course, there'll be corrections along the way, but I think the trend is very clear.
Markets have been pretty focused on how he's going to form his economic team. I mean, I think the reason why markets have really backed him is because of his economic advisor, Paula Guedes. There is a list of names of who they're going to be forming, but we heard from an interview from Bolsonaro over the weekend saying the final decision for forming his cabinet is going to come down to the chief of staff. Do you think that actually matters then to markets?
No, I don't think so. I think the direction is the most important thing. How he gets there, who he appoints, etc. That's another factor which will not be very important. The key is to look at the direction he's moving and what he's talking about. The first thing he talks about is pension reform, because he realized that's key to having the financial markets in order.
He's a controversial character, isn't he, Mark? And he's got a lot of healing to do, not just the economy, but societally. And do you think he's able to do that?
I think so. I mean, he's had a lot of experience in Congress, as you know, and I think the fact that he won the election by a pretty good margin indicates that there are a lot of people behind him in every racial category, every economic category. So I think he's going to be able to unite the people. The key, of course, is corruption. How is he going to continue the attack on corruption? And that affects everybody. And if he's able to do that, he's going to get strong support from every aspect of the society.
What would you buy in Brazil?
Right now, I would focus on the smaller companies because at the end of the day, those are the ones that are going to benefit the most from these kinds of reforms. The big companies, of course, will do well. I mean, you've already seen the index moving up, but I would go after the medium and smaller companies.
And how about the real? Where do you see the real going from here?
Strengthening. I think you're going to see a stronger real going forward. As these reforms kick in, you'll see a stronger real.
Just also, Mark, how is Brazil at the moment? I mean, we've seen this crisis. We've seen Argentina as well. Are they coming out of it anyway currently? And how does it compare with other investment destinations in that part of the world?
Well, Brazil is the big boy on the block, followed by Mexico. So we look at those two markets to begin with. But then look at Argentina. Argentina is really down low. I mean, you've had an incredible crash in the market, not only in the currency, but in the market itself. So there are opportunities in Argentina, to some extent in Chile, although Chile is very much dependent on what's happening with copper. But I would say Mexico and Brazil will be the ones that we want to focus on at this stage of the game. And Mexico is looking good as well, because with the agreement with the U.S., I think Mexico is going to benefit from this trade war, the China trade war, because more and more manufacturing will be transferred to Mexico from China. And by the way, Brazil is probably going to also benefit from this situation. So it's really interesting to see how the situation in Mexico and Brazil and the rest of Latin America is changing.
How about EMs as a whole, Mark? I mean, are we close to the bottom?
I think we're near the bottom, but probably a little bit more to go. Generally, if you look at the index, we'll probably go down a little bit more. But there are lots of opportunities for us at this stage of the game. It's a stock picker's game now. We know we're not going to buy the index. We're going to buy individual stocks, particularly those that appear to be interested in improving their governance. ESG is the name of the game these days, so we're going to be watching that very, very carefully.
You called Khashoggi's murder a game changer for Saudi investors, apart from the horrific nature of the death, etc. In what do you mean here exactly?
Well, if you look at the situation from a broader perspective, you know, the Saudi effort to close down Al Jazeera, which is almost as good as Bloomberg, but a good network, it's not a good sign. In other words, these kinds of moves by the current administration in Saudi Arabia is not good for investors and not good for the general public. So I think we ought to take a stand and say, look, we're not going to make investments until there are changes and reforms in the real sense. Now, I realize there are talks about making reforms in terms of things like allowing women to drive, et cetera. That's fine. But you can't have a situation where you're murdering journalists, but in particular like that, without any repercussions. It's not a good sign.
Mark, some have said that the crisis seems to be dying down now. I mean, we had a guest last week that's saying we really haven't seen any political breaks from, likes of Turkey with Saudi Arabia. It seems like this isolation of Saudi Arabia itself is being viewed as dangerous. So do you think in that aspect things haven't exactly changed?
Not really. And you can see the position of the U.S., the European countries, and other countries around the world, Japan. They depend on Saudi Arabia for oil. They depend on Saudi Arabia as a market for their goods. In the U.S., as you know, tremendous orders for military hardware. So it's a real dilemma for these countries. But I think as individual investors, we can take a stand and say, look, we're not going to be interested in investing in these countries that treat people that way.
Mark, people do have short memories, and is there, people may say that it's dying down, but in 6 months' time, do you think that this narrative will be in people's heads?
I think it's quite possible that people will forget and life will go on. The dilemma that people face is that, on the one hand, you don't like what the administration has done, the leadership has done in Saudi Arabia, but on the other hand, you have relationships with individual companies and people in the country that you want to maintain. So it's a real dilemma for many, many people. But I think as investors, we've got to take a stand on this and really try to push for more reform on this side.
We have the Fed continuing to tighten. We also have elections coming up. That's suddenly going to be weak rupee.
Yeah. Well, at the end of the day, I think the market in India is looking much, much better than China, of course. And I think what you're seeing is transfer of money from China into India on the basis of the fact that many people believe that India will benefit in terms of their exports. They'll take over some of the export force from China. So that's sort of a positive for the Indian rupee. And of course, central bank in India has been raising rates, which also has supported the currency. Personally, I don't think that's a very good idea, because I think What they've got to do is increase productivity in the economy, and that means lower rates is really what's necessary. But anyway, that's the situation now. The market is down by 16, 17% from the top, the highest point this year. And I think we've got a little bit more to go on the downside. But as you know, the banks are beginning to wipe out the bad loans with the help of the government. The infrastructure company that had all these problems, now that's being resolved. So I think things are looking much better for India.
But we also have a situation where yield is also lower. That will make it difficult to attract capital.
Yes, on the fixed income side, that's a different story. But on the equity side, lower rates is very good. And that's the reason why I recommend, in order to increase productivity, you lower the rates so that companies can get credit. Up to now, there's been a real problem because of this credit squeeze. As a result of the bad loans that piled up, it was very difficult to get credit. I think that'll probably ease going forward. And probably that's what the market is telling us, that things are going to get better. But still, I believe there'll be a little bit more of a correction in India going forward.
So not quite the time yet
Not
to be
quite.
buying into financials, banks. Would they at some point in time look attractive?
Yeah, interesting point on the financials. I would begin looking at the non-bank financials, which have been particularly weak and have really been bombed out. Now, some of them are toxic. You don't want to even get close to them. But the survivors will take market share, and there'll be some good opportunities.
Mark, just talking about India, there used to be a common adage. For decades, people used to say, India's got a great future. In 10 years' time, it'll continue to have a great future. Are we getting out of that cycle?
I believe so, because although it takes time, there are reforms taking place. The excise tax is one good example of that, which has really increased productivity in India tremendously. So as these reforms come in, as you know, it's a democracy. It takes time. And India is not one country, really. It's a collection of states. It's really a confederation. Different languages, different cultures, different foods, etc. But they're gradually coming together as a result of the internet and the spread of smartphones. And I believe that they're really on the takeoff stage now. Very high growth going forward.
Mark, you mentioned that the rupee weakness could be over. What signs are you seeing that we've reached that? Is it that the dollar is going to peak soon, or oil is going to peak?
That's one point. Of course, oil, I believe, will continue up maybe to 100. That will affect India, but don't forget, they're also exporting. So they will probably increase their exports as a result of the weak rupee and because of what's happening with China and the U.S. I think so they'll take over some of the exports. So I'm not too worried about the oil price impact on India. Don't forget, they've also moved very, very rapidly to wind energy, solar energy, etc. And you can see an acceleration of that going forward.
Is it fair to say, because you said earlier that, at some point India would be a good buy. Looking at vol currently at about 53%. When do you see stability returning? Would that be after the 5 state elections? Would that be a good gauge when you should be looking into getting back into India?
Yes. I mean, if you look at the state elections, if Modi is weakened significantly, then watch out. You've got to really consider. But even with that happening, I'm not that worried because I believe the direction is clear. Let's say Congress comes back in. They're not going to move back into the old way of doing things. They're going to have to move forward towards more and more reforms. Nevertheless, Modi is in still a very strong position.